Gary, Gary, can you please report to the front of the room, please?
The House Insurance Committee will come to order. Mr. Clerk, will you please take attendance?
Chair Harris.
Here.
Representative Sisdell.
Here.
Leitner.
Here.
Posthumus. Aragona.
Here.
Nyer.
Here.
Schutte.
Here.
Carter.
Here.
Tate.
Here.
Fitzgerald.
Here.
Whitsett. Mr. Chair, you have 9 members present, a quorum.
Thank you. And can I have a motion to approve the minutes of the October 29th meeting? And Minority Vice Chair Carter makes that motion. Seeing no objection, the minutes are approved. All right, on the agenda today is testimony on House Bill 5298 and 5299, introduced by myself and Representative Jason Morgan. I'm going to read in a couple cards today, and then I'll give you a brief overview, and then we have some guests that are going to come up and speak as well. Let's see. Not wishing to speak and opposes the bill, Mitch Albers from the Michigan Association for Justice. Not wishing to speak, supports the bill, is Craig Puckett from the Big Eye of Michigan. All right, with that, the quick overview of the bill, both bills. Rep. Morgan wasn't able to be here today, so we'll cover his as well. Members of the bills before us would remove language in the insurance code that requires passengers of limousines to claim benefits through the insurance policy of the business if they are injured in an accident. Currently, the code, which you'll hear more about in a minute, allows a carve-out for different types of public and private transportation. However, limos were not included in this back during the insurance reform. Going forward, under this bill, limo passengers would claim benefits through their own auto policy or the Michigan Assigned Claims Plan, just as some of these other groups like Uber and whatnot are able to do. We will have a sub that we're working on finalizing some language for next committee, and we appreciate all the stakeholders that have weighed in on this and provided some feedback and kind of steered us towards those changes. So with that, I'm going to turn it over to Sean Duvall and Chad Cushman, who are operators in the industry. Gentlemen, if you want to come up, you can start whenever you're ready.
Thank you. Excuse me. Thank you, Chair Harris, and thank you, members of the committee. We're very grateful to be allowed to speak here today. Many of us are small, family-owned businesses that support tourism, hospitality, workforce transportation, senior care, and airport access across the state. The issue today isn't really whether or not we should have or carry insurance, because we do. The issue is when and why that insurance is forced to pay. Under Michigan's current no-fault structure, certain passenger transportation providers are placed at or near the front of the PIP order of priority. In real terms, that means our commercial policies are required to pay medical benefits even when we're not at fault, even when another driver caused the crash, and even when the injured passenger has their own auto insurance. I'm going to give you an example from my own company. One of our vehicles at 2 o'clock in the morning, taking someone home on a paratransit trip, stopped at a stoplight, and in a turn lane, and out of nowhere, because how the priorities rules work today, we were crashed into. I'm sorry, we had a rear end collision. We didn't do anything wrong. We were just sitting there. Because of the way the priority rules work today, that collision on a $30 trip cost me, in my $50,000 deductible, $17,000 to repair my vehicle, and almost $25,000 in medical benefits for the person in the back seat of the car. Well, that doesn't make any sense at all for a $30 trip out of pocket to cost an operator that kind of money. We have that $50,000 deductible because that's what we had to have in order to get insurance in a normal market, not going through the assigned risk. The scenario is not unusual. For Golden Limousine International, we could suffer that loss, and it's painful, but we got through it. This is going to bankrupt a lot of companies. You can imagine a $50,000, $45,000 to $50,000 claim bankrupting a company. The result of these kinds of scenarios is that insurance companies stop writing premiums or stop writing policies for companies in our industry. They don't know what the risk is. Every soul on board, $250,000 per person, regardless of whether we're at fault or not. Now, our liability takes over when we're at fault, and that makes all the sense in the world. Our liability coverage is there for when we do something wrong. But from a medical standpoint, or medical coverage, or PIP coverage, when we're not at fault and we're getting these claims, it is a business killer. The insurance companies have basically not taken themselves out of the state from being registered in the state to insure. They just don't write the policy. They don't give you a quote. And because they don't give you a quote, you get one, maybe two quotes on your policy. They're at the highest end, and then the other opportunity you have is with assigned risk, which is just terrible for anybody in our. So when we're at fault, like I said, we accept full responsibility, and our liability kicks in. We have $5 million, sometimes $10 million of coverage. On the limousine side, you have $1 million of coverage. You don't have that on the PIP coverage. It's just we're responsible for medical coverage first in the order of priority, and that is what we're trying to fix today.
We appreciate the opportunity, and for those of you that don't know me, I'm Chad Cushman. I'm the president of Indian Trails Michigan Flyer, a 115-year-old family-owned company based right here in Michigan, third generation. I would say we're probably one of the largest motor coach companies in Michigan. We have a lot of the familiar contracts that people know about. Hopefully you've either, in the last few years, rode Michigan Flyer. For those of you that are in Southeast Michigan, D2A2, the commuter service, DAX. We are a 50-year contractor of the Michigan Department of Transportation. We operate all of the intercity bus service under contract with MDOT throughout the entire northern part of Michigan, the UP. I want to give you some perspective on how this is impacting our company and how critical this is. In the last 5 years, our loss ratios have averaged about 20%, which is excellent in our industry. In that same 5-year period, our premiums have gone up 112%. 4 years ago, when we introduced the first version of that House bill, we spoke before the committee on what we had experienced the previous 3, 4, 5 years before that. And from about 2015 to 2020, our premiums had gone up 75%. Now keep in mind, this is a company with excellent loss ratios, with excellent business, a 115-year-old financially stable company. Part of the reason we cannot get competitive rates is because when insurance companies are requested to provide quotes for us, and we typically will go out and ask about 15 to 20 different companies to quote, and they're all registered to quote in Michigan. The last 3 renewals, we've only gotten quotes from 2 different companies, one that was on the fence. And when we ask them, why is it that you won't quote us? We have excellent loss ratios. We have excellent history. We're a reputable company. We're financially stable. We have an excellent safety record. Has nothing to do with any of that. The number one response we get from those insurance companies is venue. And when I say venue, it's not just the city of Detroit, because we do a lot of services in the city of Detroit. When they say venue, they're referring to the state of Michigan. We cannot continue to absorb 20, 30% rate increases. We just had a board meeting with our owners a few weeks ago, and we've talked about this insurance issue. And we're doing, Sean and I both, doing everything we can to figure out how we can stay in business next year and the year after. We're not giving our people the type of raises they deserve because we have to absorb more insurance premiums. We're not able to give the bonuses that we'd like to give because we have to continue to absorb these premiums. If you're not familiar with our industry, we are an extremely low margin industry. If we make 10% profit in any given year, that's great. Our owners, and this is how critical this is, 115-year-old company, our owners are starting to ask me, what should we do about possibly transitioning out of this business? Our company is worth more if we simply liquidate the assets and just move on, because we're not going to continue to absorb these premium increases. And here's what's going to happen. When you have companies like ours that leave or just exit the industry, and I'll give you some statistics. In 2020, before COVID, there were 230 registered private sector transportation companies here in Michigan. Today, we're down to about 150. Now, a lot of those companies exited because of COVID, but I would say probably half of them because they either couldn't get an insurance quote despite their experience, or they couldn't afford the premiums. And that's how critical this is. And if you don't have Michigan-based companies operating the type of services we're doing, you're going to have companies that are, and it's already happening, whether you see it or not. If you're driving down the highway and you see these buses rolling down the road that you've never seen before, it's because they're coming from out of state to operate service here in Michigan with out-of-state employees that don't pay income taxes in this state. They don't pay business taxes. They're taking our business because we don't have enough companies to operate the business that's here. Our face, the type of business we operate, yes, we're a big scheduled service operator. We operate Michigan Flyer, but we do a lot of charter work. We do a lot of convention work. I'll give a couple examples. Back in 2004, Sean and I worked together to handle the entire European contingent of Ryder Cup. Huge contract. For our two companies combined, it was about $500,000 in revenue in 1 week. 1 week. A lot of other hodgepodge companies, there was a broker called the Convention Store that handled the entire U.S. contingent, and the service was deplorable. Michigan-based companies got the contract with the European contingent. We handled it. We did Super Bowl together in 2006. We did the NCAA Final Four in 2007 or 8. Any of these big convention groups that come in, when they need transportation, they're depending on companies like us to do it. And if we're not here, there will be companies coming in from out of state that are going to take it over. And we won't come back. And part of the reason our owners are looking to liquidate right now, I'm not saying they're going to, but this is how serious the discussion is. New motor coaches since 2020 have gone up in cost about 60, 70%. So all of our used equipment, because people aren't buying new coaches anymore, if you've ridden on the Michigan Flyer Indian Trails, those new motor coaches now cost about $750,000. Now all of a sudden our used assets are worth so much that it becomes kind of an attractive option to look at possibly liquidating your business. Selling to other companies isn't necessarily an attractive option because our profit margins are shrunk so much that we don't have the type of EBITDA or cash flow that's attractive to them. So I am asking today for you to not just seriously consider this, but let's get this bill through, because if companies like us fail when we are probably arguably one of the best operating in Michigan, then I know others are going to follow. And this whole insurance thing, it's not just a Michigan issue. I can tell you our industry across the country, it is the number one item, and it is putting other companies out of business in other parts of the country. But statistically, Michigan is seeing more companies going out of business in the last 5 years as you know, proportionately than most other states. And it's because of this insurance law. If we can get this fixed, we can then, when I go out to bid for my fleet liability renewal, if I can get 15 companies to now provide quotes, because now it's attractive to write policies here in Michigan, prices will come down. That's what brings the prices down. The companies that are left that are willing to write policies in Michigan, they're jacking prices up because they know they don't have competition. And we're forced to pay it because if we're going to roll a bus down the road, we're federally required to have this insurance in place. So I appreciate the opportunity. I appreciate you accepting my passion and talking about this, but this is how critical it is. And I, again, would argue we're one of the most financially stable companies in the industry. If this is what we're looking at right now, if we don't fix this, what's going to happen to the others?
Thank you. And I can just say, you know, to reiterate some of it, part of what gave me interest in this is the fact that my district, we're close to a lot of entertainment venues, we're close to an airport. We had numerous limousine companies and whatnot that operated within our district, and my neighbor also had a lot. We have seen the industry just decimated. We've seen all these businesses close. I think we have one limo company left, and they struggle. But all the other ones that typically ran these things every day, we don't see anymore. And you're right, in Southeast Michigan especially, we see a lot of out-of-state companies coming in and providing, you know, coverage, which is a shame.
Yeah, and in like the D2A2 and DAX contract, when that RFP was issued by the RTA of Southeast Michigan, 38 different companies downloaded the RFP. Almost every company was an out-of-state company. We got the contract. We just got it renewed in September 2025, one more year for 2 one-year renewals. If we didn't operate that service, a Michigan-based company with Michigan-based employees paying taxes in Michigan, it will be an out-of-state company that would take it over. Not just that, but the MDOT contracts, all of that stuff.
And I want to make sure I let everyone else get a chance to ask a question too, but can you cover, I mean, my intention is not to give you guys some special treatment, right? I know some of your colleagues have heard me say parity over and over again. Can you talk about how this addresses kind of a parity in the insurance code?
Yeah, the challenge is that you have limousine services that are specifically first in the order of priority. That means in an event of an accident, the limousine company's insurance is what, the limousine company's PIP insurance is what pays the medical benefits for anybody that's injured in the vehicle. Workers' comp obviously pays for the driver, but the passengers, and if it's one person, then it's one person up to $250,000. If it's 8 people, it's 8 people up to $250,000 each. very challenging on an underwriter at an insurance company to try and manage that risk. First in the order of priority is a position where the limousine industry is unique. Taxis, transit, Uber and Lyft, one other one, are all third in the order of priority. So instead of the limousine industry, which is just, it could be a car service taking you to the airport or a taxi taking you to an airport. The car service pays first in the order of priority, the taxi pays third in the order of priority. So we're not asking not to pay insurance. We're not asking to reduce coverage for anybody. We're just asking for parity with all of the rest of the passenger carrying industry. If you're on a transit vehicle, if you're in a taxi, those all, in Uber and Lyft, those all are third in the order of priority. That's where the limousine industry should sit as well.
Any questions from other members? Rep. Fitzgerald.
Thank you, Chair, and thank you both for being here today. You're right, the insurance market is incredibly challenging for large auto risks such as yourselves, and that has been the case for probably the better part of a decade, if not a little bit longer as well, predating actually the reform, I bet, because auto has a very high frequency of loss, and with, like what you mentioned there, a new motor coach having 60 or 70% additional cost, a lot of that is technological. A lot of that is parts costs. And so I talk about this sometimes in this committee with personal autos, is that a side mirror, I changed my wife's side mirror 15 years ago for $30 on a Saturn vehicle. Today, it has cameras, it has sensors, it has all sorts of things. So that same $30 fix from 15 years ago is now $2,500 in some cases when a side mirror is gone. Exactly right, and there's a huge lead time on those same costs. And so if the vehicle's non-drivable, there's extended costs to the insurer as well. It's a problem, and it's a challenge. With all of this, to be said, is that that's all regarding property damage, the physical damage to the property that we have, which I don't disagree is a problem that we have within the marketplace that you are seeking to have that risk. But the two issues between physical damage and medical liability are really two different issues that are, I think, being conflated into one driver for the marketplace. I wonder if you can tell me a little bit more about, you mentioned that the standard market and then the assigned risk pool are really the only two options. But alternative risk solutions such as captive insurance, especially for people who have great loss ratios, 20% would be, I would venture to guess, is industry leading. Yeah,
and I can address that too. And Sean and I were talking about that a little bit before we came up here. So, and I'll clarify too, for 2025, our renewal, 30% with 10% loss ratio in 2025. And by the way, that was with a $100,000 deductible on the liability claims and $50,000 deductible on the physical damage claims. So for all intents and purposes, we were self-insured because we paid all but one claim because they were all under the deductible. So to address that, and this is a good example, there are captive options available. We both pursued the same captive option on our renewals this year. He was able to get into the captive option. We weren't, even though we have excellent loss ratios. And it was through a company called Captive Resources who handles the majority of the captives. And when they got back to me and said, we will be declining to quote you, I said, why? Their number one reason wasn't venue this time, but their number one reason was, with a company like us, we are a public transportation provider. We operate all of the Indian Trail scheduled services. We operate Michigan Flyer. We operate D2 DAX. We have a higher percentage of passengers that don't own cars, that don't have car insurance, they don't have medical insurance, and in every instance, we will be the ones responsible for their medical bills. So it's beyond, for us now, the venue. It's because of the customers that you serve. And the thing that makes me so irate is the service that we provide under contract with MDOT, which is all of the what's called 5311F rural route services. These are the most underserved people in our community, in our state. Average household income of a inner city bus rider in Michigan based on the last survey, about $22,000, $23,000 a year. They don't own cars. So the insurance companies are telling us, we don't want to quote you because of the people that you're serving. And I can't do anything about it, but you all can help us do something about it because it's not right.
Representative Fitzgerald, the issue really isn't about whether or not we can repair our vehicles. This is truly 100% about the PIP coverage. So the PIP coverage that we're first in the order of priority for at $250,000 per person. If you have a 50-passenger coach, that is an unimaginable number for the underwriter to try and manage, especially when you're not at fault. So that's really, it's not about repairing the vehicle, the cost of the equipment, the cost of the bus. This is strictly about the medical coverage for the passengers on the vehicle, and where their car insurance, their household insurance, and then MACPA should come into play. Instead of that, our industry is first in the order of priority.
And if I could add one other thing, the majority of our premiums combined between liability and physical damage are a result of the liability coverage. Liability coverage is the big part of it. We have no concerns with the physical damage quotes that we're getting provided. But when an insurance company won't provide you with a quote, period, not only do you not have physical damage, you don't have the liability portion. So they won't quote one without the other.
And I think just to bring another factor into this, because this is really, I think, maybe demonstrating to the committee as well as anyone who may be interested in this, kind of the complexities of the underwriting that comes into a commercial risk, especially those with, again, auto is a high-risk environment because these are, again, it's property that is mobile, that it does have that liability that you're talking about, and some of this is also driven by court decisions about awards, and especially those when we talk about the 18-wheelers and we talk about the large vehicles that are on the road, including large buses. The awards are increasing that. We call that social inflation, right? And we see that the $1 million claim from 8 years ago is now a $10 million award based on today's market. And so I can understand that the liability is pushing that forward because of the risk that you do have, the risk profile that you do have.
And we are certainly understanding that the liability is, again, a federal requirement. It's on us, and we accept that. The PIP coverage is what's different. The medical coverage is what's different. I don't want anybody to think that we're here arguing about paying for liability insurance when we do something wrong. Correct. 100%, we accept that responsibility. What we are struggling with is being first in the order of priority, not the same as any other passenger carrying entity, whether it's transit, taxis, Uber, and Lyft. Just put the limousine industry at the same level as everyone else for medical coverage. And everybody has statutory requirements for liability. You can do whatever you want in terms of your, or whatever your lender will allow you to do in terms of caring for your vehicle, in terms of your physical damage. Liability will take responsibility for. PIP is something that we just want parity for.
Thank you. Minority Vice Chair Carter.
Thank you, Mr. Chair, and thank you for your testimony. I'm familiar with what you're talking about. I just want to get you to explain to me, if these bills are introduced as is, how would that risk be distributed when it's taken off of you? And I understand the need to have it taken off you. The example of the $250 per 50 passenger bus was frightening. So, but tell me, who will absorb the risk if you're no longer responsible?
So I'll say two things about that. First, the same way that a taxi, the transit agencies, Uber and Lyft, there's still a mechanism. First, it's your car insurance. Then it's your household insurance. So if someone in your household has insurance, that medical coverage would fall to their insurance. After that, then it goes to MACPA. In in your particular situation, the Uber, Lyft, taxis, they're third in the order of priority. So your car insurance, household, taxis, that level, and then MACPA. In this situation, we're first, right? So it doesn't get to your car insurance. It just comes to us, and they'll exhaust those resources from us.
Okay, thank you. I understand that part. I guess where I'm headed with this is that one of the things you mentioned was the large population of uninsured and underinsured that utilizes your services. With the assumption that they're uninsured or underinsured and not able to absorb this risk, where would it go from there? Assigned claims or what?
So we do fall into the order of priority. So we're third in the order of priority. So we would have some risk assigned to us. But I would just say that what Chad said is real. If his business goes away,
Understood.
all of those folks are going to be on the road. They're going to drive without insurance. And that's going to end up in MACPA as well. So people are a little concerned that MACPA is going to be overwhelmed because the limousine industry and our 140 carriers go away. But if those people start driving, that's still going to go to MACPA.
I want one more thing, Mr. Chair. I want to thank you about mentioning a word called captives. Okay, I want Mr. Chair to hear that word CAPTIVS. Thank you so very much.
If I could add to really quick what Sean was saying, keep in mind the goal of this is to get insurance companies to come back to the state to provide quotes. The problem will take care of itself in the long run if we can simply get these insurance companies to come back. And it's not going to happen overnight either. It's going to take some time, but this is where it starts.
Thank you for that.
Yeah, and I think Minority Vice Chair Carter, along with the captives, I'll let you spell it again. I think, again, the thing that I think brought me to the table on this was that you guys were excluded versus everybody else. And for the life of me, I'm not sure why. That was obviously before my time, but I'm sure that's something that you can hit on.
I can tell you why. So when you think about all the other modes of transportation in Michigan, from public transits who are represented by MPTA, Amtrak, they have huge budget. We are small, privately owned companies. We don't have the budgets to be able to hire people to advocate and lobby for us. We were simply left off the table when all that work was done in the no-fault auto reform, which should have been. And as we were meeting with senators and representatives, the kind of response was, oh, we left them out of this? Oh, that wasn't the intent. It wasn't the intent to leave us out. It was a afterthought. It was an oversight. So
Thank you. I suppose Minority Vice Chair Carter, I'll allow you one more question because I like you.
What he did is he wrote on this paper, no. So just for clarity, this is limousine services only. No?
no, this would represent. Keep in mind, Sean's company, Golden Limousine, but he doesn't just operate limousines. He operates minibuses. He operates motor coaches.
That's what I wanted to clarify.
Companies like ours, you see the big 45-foot Prevost MCI motor coaches, but we also operate shuttle buses, like campus shuttles. Here in East Lansing, we do the lodges shuttles. So it's...
And this whole package was excluded, correct?
Yes.
That's the clarity I needed. Thank you.
Any other questions? No? Okay, thank you both for being here. We appreciate it. All right, with that, can I have a motion to excuse absent members? Rep. Schutte will handle that for us. I appreciate it. And without objection, absent members are excused. And with no further business before the committee, we are adjourned.